So I'm Tal Schwartz. I'm one of the organizers of this event, and you may know me from an email that I send a lot of you every Monday. And I'm also a general partner at a fintech venture capital firm called North Exit Ventures. And I'm so excited to be joined with Chadwick.
Thank you.
Chadwick is the, as Gary said, newly minted 2 months now, CEO.
This week,
at EQB.
Week.
Yeah, congratulations.
Thanks.
So 2 months, but you're no stranger to the bank. You were a longtime CFO, and then prior to EQB, 20-year career at Scotiabank.
That's right.
And I think importantly, you've assumed the role after the sad passing of Andrew Moore, the prior CEO of the bank. Andrew had spoken at this event numerous times, very well known in this community, a huge champion of financial services innovation, and the fintech community. And he also oversaw like a huge period of expansion for the bank. I think you're now sitting at 140 billion in assets, and really earned the moniker that you guys now champion, Canada's challenger bank.
Right.
So to start things off, one, would love to hear a little bit more about yourself and your career for the folks in the room that don't know you that well. But I think with the context that I just gave, tell us a little bit about what your plans are for year one, and maybe more specifically, what are the things that you want to keep exactly the same, and what are the things that you would like to change?
Sure, that's no pressure. This big photo, that was a huge introduction. Go Jays. Let's get some excitement going on the Monday for anybody that's awake. Another big night ahead. This should be an electrifying day, so I really, really appreciate the invitation. And it is great to pay tribute to Andrew. He was a close friend and an extraordinary human, and he's missed by all of us every day. So it's a lot to jump into, but I couldn't be happier than to be here. Thanks for spending time with me this morning. We can never get enough opportunity to speak about change in Canada. And we truly believe we're a catalyst for competition in Canada. And I'm so excited to be a part of that and to be leading that and to be here with a lot of the lenders in Canada bringing that change. And for me, you covered it, right? I grew up in banking. I joined EQB because I really believed there had to be a better way to bank in Canada. There had to be a better way to help build a better country. There had to be a better way to get past bureaucracy, slow process, a concentrated market, and bring more choice. And that's what brought me out of Scotia to EQB. I left EQB to join a tech company that I also believed in. And then when this opportunity came up to return, I couldn't be more happy to be here, right? To really bring that next chapter of growth. And it really is just getting going, right? To your point of all the pressure points for Andrew, I think the value of the company increased about 25 times in his nearly 2 decades. So it's a high bar to go. But but the reality is we're just getting started. This is almost the Goldilocks of banking. We are the challenger in this country. We have the scale now as the 7th largest Schedule I bank in Canada, so we have a real responsibility. But we also truly believe in helping the ecosystem and bringing a lot more option to Canadians by partnering with fintechs, by partnering with other lenders. So we can talk about a lot of that as well. But a lot of my big focus right now, and I'm not going to share the whole strategy because I'm just a couple months in, and a lot of that will actually come in at Investor Day that we're going to have next spring. But very focused in the near term on bringing a sense of urgency and focus to this company, this very unique, important company. So that's really reigniting the growth of the company. That's completing the product shelf to the company. So that really means taking the challenger to its full potential. And we can talk a little bit more about that. And then really bringing more clarity back to the core capabilities of the company. That includes efficiency as a traditional competitive advantage and really leveraging that technology platform of EQB. So what that will mean in terms of your question, a couple things the exact same and different. I think a couple things that will be the exact same is the challenger mindset. Like we are designed to be here to actually take share and create more option for Canada. And that challenger mindset, having different products, services, things of value, not just plain vanilla things into the market, but actually bringing different distinct options is going to stay. We are challengers. We have 2,000 challengers in this country. That's going to continue. And that culture, that purpose, that intent, I've never met anyone who's part of our company that didn't want to be part of our company. You know, it's not just people are there for a paycheck. They're there because they believe in what we're doing. It's so important here. I truly believe in this purpose, this intent of the challenger and bringing more choice. So that challenger, that culture will stay. And the ROE, so when you're an investor in the company, hopefully you're either a user of an EQ product or an investor in the stock, but a lot of those things come back to return on equity. So everything we do has that ROE mindset, and that's going to continue in terms of how we deploy capital, how we grow the company. There's a bit of a religion around ROE in the company, so that will stay as well. And then some things that will be different is that it's going to focus on a few big things and doing those really well. I think the largest banks try to be all things to all people, and that's okay. A lot of great fintechs focus on doing one thing really well. There's a few big things that we can do really well, and I'm going to focus on those and a lot less on other things. Okay, and so you'll see a lot of that roll out over the next 12 months, and that's a really, really important delineation in how we allocate capital. And then also just actually being more thoughtful again around efficiency as a competitive advantage. That will shift as well, and that hasn't been there as much in the past. So there's some things that will be similar, some things different, but you're going to see a much different scale as we're a catalyst for growth going forward.
So maybe let's talk about, I suppose, what might be one of those other things. You recently passed a pretty significant milestone around your digital banking platform. So
Yep.
I think the number was you hit $1 billion in prepaid card loads. And I think you've done a pretty tremendous job building a consumer-facing digital strategy.
Yeah.
And one thing I've noticed is a lot of the campaigns that you've run, I think have sort of avoided the trap of chasing hot money, which is a very easy thing for a bank to do. So talk to us a little bit about your deposit strategy, writ large, and maybe how it fits into that, the next year strategy for you guys.
Yeah, sure. What's fascinating about EQ is a lot of people still don't know we're here. My hypothesis, probably 7 to 8 out of 10 Canadians still don't know we're here. Did anyone know we were here before we presented? Hopefully everyone knew, but there's a reality, right? So we're a 55-year-old company. We've been a public company for 20 years. We've only had a consumer brand for 9, and really it's in the last few years we've ignited that. So one thing that will be true, and hold me to account for it, my intent over the next several years is the opposite of that is true. And we will have intent that you'll see roll out where I want it to be more 7, 8, 9 out of 10 Canadians do know we're here, and they know why we're here very explicitly, simply. And that will include things like retiring the Equitable brand, focusing on EQ, bringing more consistency to it. But for EQ and from a funding strategy, one thing to be true, if you're going to be a large, meaningful, important, really Goldilocks bank, true bank in this country, you need great, consistent funding. So we've implemented several layers to our funding stack over the past several years, over half a dozen different key funding levers, so we can then bring better pricing, better options to Canadians. And we have European cover bonds, deposit notes, we have credit union deposits, because we also focus very much on the credit union ecosystem and supporting credit unions and their 6 million members. We have obviously the broker GIC channel that's important to us, but we have EQ. So EQ now, it's nearly 10 billion in deposits. That's call it maybe 30% of our funding stack. We would intend for that to become at least 75% of our funding stack. So that's our lowest source cost of funding, very consistent, and that will enable us to do more on the product and development side. So that's going to grow exponentially over the next few years. But to do that, you need awareness, but you also need to finish the product shelf. So there will be more of a trifecta in EQ that will enable us to grow the funding around the unsecured payment side, around the integrated wealth side, and that day-to-day side. And to be honest, it wouldn't be that difficult to instead have 600,000 customers and 10 billion deposits. For sure, we could have had 25, 30 billion deposits and a couple million customers, but what would be the value? We have a responsibility as a public company to our shareholders to ensure we're growing thoughtfully, profitably, consistently. So that's why your point's very important. You can't have hot money, then you run into issues where something changes. We've all seen that play out in the US market. We've seen that play out in different markets where that funding can disappear quickly. So we've had pretty contained concentration limits per account where we haven't even been able to go over 200,000 per account in deposits. So that reduces some of that liquidity flow. That is going to change because I think we're at a different point in time. So if you want to store more money with us, if you're worried about anything happening in the equity markets, we're actually going to be increasing that amount pretty meaningfully next month. But we're going to add more products. Then people can do more business with us and hold more funding with us. You're going to see more of that come out with clarity over coming months. So that will increase significantly. And then on the small business side as well, right? As part of that, it's just like the personal side. We saw a need that didn't exist in Canada for a true digital end-to-end solution with no fees, a great everyday rate, and small business owners need that. Because it hasn't really existed in that way. There's always fees, there's always complexity, there's always going into a branch. So we launched that to really help amplify the potential of EQ Bank. And so there's more to come in personal, but that will come out more and more. And there will be more products to come with that as well, including the card, including the US dollar account, just like the rest of EQ. So there's a pretty thoughtful plan to come. It's early days in that. That's just a couple weeks launched. And we're focusing, especially in that one, on more the solopreneurs, so that kind of more the self-employed small business owner, where we have a lot of experience through the single-family side, where we're number one in lending to business for self for mortgages. So we have great experience with a lot of these important Canadians. So we're focusing even more on the solopreneurs as well as we start small business as part of that EQ Bank expansion, as part of our overall funding strategy.
The small business product is a really interesting one because it's an area that I think a lot of the big Canadian banks have, I would say, struggled to really service well. And there's some obvious reasons. I mean, the small business sector is generally, it's fragmented, it's hard to lend to for numerous reasons. I mean, you explained a little bit of it there, but I guess why is now the right time to be pushing out into small business? Is it the lack of options, or is there something else?
We've actually been working on it for a while. So the time is now. It's because people need it. Right? We're here to help where there's need. And we've actually been working on this for probably 3 or 4 years. We, to be honest, have been going too slow. That's why now. That's one thing that's going to change. A lot more sense of urgency. We're going to move further, more focused, faster, constant sense of urgency, as you need to be as the challenger of this country. So for small business, people are in need more than ever, especially small business owners. A lot of people are impacted right now across sectors, across the economy, for a variety of reasons we can all imagine in the room. So I think it's more important now than ever that they have a great, consistent, everyday offer, again, with no fees, great rate, and a great partner to work with. So it felt right. We've been piloting for a while, because one thing you also don't want to do is you don't want to mess it up. You get one chance to earn the trust of a small business owner. So we wanted to test. We were on pilot, then we were on pilot again. We went slow. So kind of go slow, then go big. So that's what we did. And then we'll go bigger. So that's why it's a little bit of test and learn, and then we'll come out with the rest of the products as we did. And that will include Quebec. We haven't always been consistent in getting the whole country launched at once, but we will, and that will change going forward. Quebec is an incredible component of this country. It's a respectful nation, and we're to make sure we roll out things more consistently across all of Canada going forward too.
So I want to turn the conversation a little bit to a topic or a term that you'll probably hear a few times today, to open banking.
Sure.
So I mean, Canada has been moving at a incredibly slow pace in implementing consumer-directed finance. But EQ, throughout this entire process, has been a huge champion of change.
Yes.
So, I mean, assuming we get there, and I think there are some hints that maybe in the next budget there will be some exciting announcements here, but assuming that we get there soon, what can we expect to see from EQ, maybe in terms of partnerships or use cases or APIs?
Yeah, and some of the questions would be great for, if anyone's never met Dan Broden, our head of EQ Bank, and Janet Lynn, our CTO, just brilliant team members, and we're built on talent. So they're great for the technical details to share more and more. But what I would say is our championing of open banking is going to remain consistent. Andrew believes so deeply in that, and the whole company rallied around that. And that will continue because that's about choice and options for Canadians and really having that access to data and making sure they have all the options available to them. So that's going to continue. We've had multiple tests, technical go-lives, so we're ready for it, and we'll be a recipient of that, I think, in a big way for business inflow. So there's multiple use cases we've tested with. We're ready to roll. I think in some cases it's okay to be a fast follow, but we're going to lead in a few big ways. And I do feel very encouraged that now more than ever there is tailwind for greater competition in Canada. I'm very encouraged by the federal government, very encouraged by everything that we're hearing and seeing and participating in. So I do think it's now. And what will be incumbent is us to help Canadians understand what that means. I think even when something happens, it doesn't mean it's going to have action behind it. Mm-hmm. And as a nation, we need to ensure we're not complacent. And that happens a lot. That's why the concentration in banking exists, because we're very complacent as Canadians. And I say that as a Canadian born in Kingston, Ontario. I'm as local as it gets. We're too complacent. When we have choice, we need to take that choice. And if we have better products we can go to, we need to go get those better products and take care of ourselves and be financially driven, be financially responsible. So open banking is a great catalyst to that, because there's no reason you shouldn't be able to move your data or have better options or have another financial institution get your data if that's what you want. So I think everyone gets that now. And that's going to be an enabler, a catalyst, a real spark for better choice for Canadians. That's going to be in everyone's best interest, for sure. So I think that's going to happen.
So maybe to push the points of competition a little bit. So I mean, in the news recently, there have been some big Canadian regulators that have made some comments, basically to the extent that saying to the extent that Canada is not as competitive in terms of financial services that it should be.
It's true.
The Bank of Canada, I think, kind of surprisingly, used the word oligopoly to refer to the big banks in Canada. So maybe to put you on the spot a little bit, is that a word that you would feel comfortable also using? And if yes or no, how do you view EQ's role in creating more competition, more choice for Canadian small businesses and consumers?
Yeah, I'm going to be very specific and say absolutely it exists. And absolutely, why does any company exist? We exist to change that. Anyone can look at the per capita options, like for Canada, it's less than 40 Schedule I banks, let alone then you have some non-banks that exist. We do not have enough choice, and it is concentrated. Then every time you get bigger in this country, you get consumed up being acquired by the oligopoly. There's benefits to that. We have the best banking sector in the world, but also the most profitable banking sector in the world. And why should Canadians exist with the most profitable banking sector in the world? That means that's built off Canadians' backs. So could better choice change that? Mm-hmm. Yes, we exist to change that. And it shows the possibilities there. The interest is there by us, to your earlier point, becoming $140 billion in scale now and managed and administered assets. That means there's more and more people that want the choice. And I think that is not even close to its potential. We're a 10x leader in financial services. You're going to see significant scale in what we're doing because that choice is necessary for Canadians. So I think everyone is aware of that now, becoming more aware of it. It is very difficult to change a couple 100-year pattern in a country, but you just have to start. And I do think you need a level playing field. So part of our job is to make sure fintechs and other lenders have the chance to compete. And we're very proud to do that. We're very proud to lend our balance sheet. We're very proud to provide facilities to others to help compete. And we need a level playing field as well. So I've been very encouraged as well by regulatory sentiment. And the idea, even for us, is we just need a level playing field even for capital treatment. So important. How do you compete well if you hold 3 times the capital that another, say a large bank holds for a single-family mortgage? How does that make sense, right? Because then you have to price differently. We should have the same capital treatment, the same funding mechanisms, the same leverage ratios. We should have very, very consistent setup. And then you can compete. Level the playing field. Let us compete and bring the best options. So I think you're going to see several important changes, I believe, I hope, I believe, that will change that. So that will be a spark for everybody. That will be a catalyst for everybody. So I think capital is a really, really important means of doing that and getting money into people's pockets. So that will change, for sure.
So you started to go into the bank's like B2B strategy a little bit there. So let's pick up on that. A lot of the folks in this room come from the non-bank lending sector. There are lots of fintechs here. There are lots of specialty finance companies and a whole slew of different credit sectors. And a lot of them rely on groups like EQ for program banking or for funding facilities, processing payments, issuing cards. What is your philosophy around that kind of like bank sponsorship, and how do you as an organization decide who to work with?
Sure. Does anyone work with us in here? Wow, we need a lot more than that. That was like 3 hands. Jeez. Come on.
We got a few more in here.
So we're going to 10x that too. So we're here because we're here for Canada. So it's got to start with even knowing we're here as an option. Maybe not everyone realizes that, right? That lending to other lenders is very important. So in the strategy that you'll see rolled out, I'm very focused on a few big things and doing a few big things really well and being number one, period. Anything else, not as much. One of those things for number one, being a number one lend to other lenders and helping the ecosystem. I think that's really, really important. Sometimes we own part of the companies. We own components of several companies. So yeah, we have our balance sheet, but we're also the owner of many, many fintechs in this country. And we're very proud to do that. So I think number one is start by a conversation with us. And maybe it makes sense to have a warehouse facility. Maybe it makes sense just for us to take a component of the company and invest in you and help make sure you can be successful. And maybe we actually integrate you into our lineup. So we have several fintechs even integrated into EQ Bank. So it's kind of integrate, invest, or lend are some of the great options that exist. But it all starts with what is the company? What's the purpose of the company? And I think it has to start with a conversation. So we have several people from EQ that are here today. Anyone hiding back there? But come talk to us. We'll see. So my philosophy is that it's important. And I really don't believe everyone will lend to other lenders because that's not always like, why do you enable a competitor, right? That's sometimes actually why there's an oligopoly is because of that belief. But we're more open mindset. We operate almost with an open banking concept in everything we do. So we are here to be helpful to the ecosystem.
I think so. You mentioned also like M&A and investments. I mean, so EQ has grown obviously organically. I think we've sort of talked about the organic strategy, but also inorganically. I mean, you've picked up some amazing assets over the last few years. When you're, I guess now looking into the future to continue M&A, are you looking more for like distribution, potentially you're big in the broker space? Are you looking for technology? Are you looking for maybe more balance sheet pickups?
Sure.
And then as you're answering that, how do you tie that into, I guess, like integrating and keeping this like challenger spirit consistent through all of those platforms?
Sure. Loaded question. So a couple of things. So we have a lot of excess capital. So we operate the bank well with an ROE mindset. We're sitting on hundreds of millions in excess capital. If we actually had a level capital playing field, we could deploy even more. And we want to do that to grow, and we will do that. You're going to see us finally put that capital to work. And we've had a couple fantastic acquisitions. Concentra Bank, and some people might be familiar with that. We acquired that in 2022, and that's how we support then credit unions and a lot more fintechs. We integrated that very thoughtfully, and it was a challenger. It was designed to challenge the ecosystem as well. So could there be more Concentras? Maybe not. But it accelerated our strategy. It added distribution, so it made a lot of sense for a few reasons, and expanded funding. And then we also own a fantastic alternative asset manager called ACM that's based out of Vancouver. It's a $6 billion asset management company. Again, it's a specific challenging niche, especially investing in certain aspects of real estate. So are there more of those? Probably, yeah. But inorganic, organic, either way, we're gonna grow. But inorganic is a great approach for us. I think you can expect to see inorganic. I won't get into too much detail, but enough to say is we need to add more on the payments and unsecured, and we're going to add more wealth because there's specific segments of wealth in this country, and the magnitude of wealth transfer to happen. There's really, really solid opportunities for us to lean into that space, disrupt in that space, and you would see us deploy capital to that space. And that for sure is distribution, but we also represent distribution. So think of an EQ Bank. If anyone, and I encourage you all, please try the app. It's free, it doesn't cost you anything except for delight you with a great experience. If you go into it, you actually can scroll down and see an investment tab in EQ. And when you go into that, right now we have TFSA, RSP, we have all this set up. But right now you can invest in GICs and HISAs, not actually an integrated wealth offering yet. That's going to come, and there's a really unique way you can do that. And 8 or 9 out of 10 of our customers say, if you have that, we're going to consolidate more deposits with you, we're going to grow with you. And that's very low-hanging fruit and really based around people's aspirations. So to do that, we can partner or we can acquire and manufacture, but we then represent the distribution for that to hundreds and hundreds of thousands of customers that I think actually in the coming years is going to turn more into 3 to 5 million customers. Okay, so there's a big ambition for EQ. So you'll see more inorganic in partnership on the wealth side. You're going to see unsecured and payments come in a different way, and that will come in through partnership and inorganic as well. And then you integrate it because, you have to maintain the challenger culture and mindset and philosophy of disruption and bringing new choice and bringing different options. It can't just be the exact same product that everybody else has. There's a differentiation angle to it. And when you combine up the whole EQ experience, I think you get that. So there'll be very thoughtful rollouts to come. But definitely expect us to deploy that capital that we're generating every day. And we're even doing it in the market, right? We can buy back stock, we can invest in companies, but we prefer to put the money to work, and we will, for sure.
Amazing. I think we're out of time, but thank you so much, Chadwick. That was a really interesting discussion, and I look forward to having you back here in multiple years, just like we had Andrew up here for many years as well. So
thank you.
Thank you very much.
Thank you. I appreciate it. Thanks.